Well, hello and welcome to the PMQ live update for today, which is Friday, March 26th, the end of the week. I'm hoping everybody's got a lot of great weekend plans. The weather's coming up. It's seeming like it's going to be great for everybody across the nation. But before that, I have a really serious conversation I want to have with a good friend, Mike Rasmussen, accounting guru to the stars in the pizza industry. Mike, why don't you say hello to everybody and tell us who you are and what you do and who you work for.
Well, thanks. How you doing, Brian? Mike Rasmussen. I'm I think 36-year CPA, and I focus pretty much in the restaurant industry. A lot of you may already know me, but I really picked up the restaurant industry because I had a lot of pain, and I see a lot of pain, and it's really great helping independent restaurant owners navigate through primarily the tax law. I basically got recently, since the pandemic, I've been upstairs in my home office here studying all the tax laws and all the updates. And as you all know, if you don't know, there's so many that have come out over the past and over the past year from back in the CARES Act, way back March, almost a year ago, and then another one on December 27th and a recent one. So you tell me, Brian.
Well, no, absolutely. I mean, you've been a part of this since the beginning of the pandemic. You came in, you've given a lot of our operators and our viewers and our audience a lot of help. Selflessly, I should add. If you guys need some information, contact Mike. And I'm going to put it up here real quick, guys. For more information, Mike at hightechcpa.com. He's got all the answers. He can help you find out what you need to know. But so today, what we want to talk about, it's been a while. I know you were doing your own thing. You had your own updates and stuff like that, but I'm glad to have you back here. We want to talk today about, I guess, the employee retention tax credit. This is something that's coming out now, and that everybody really kind of needs to act fast, I guess, maybe before funds dry up. Or, I mean, why don't you tell us why we need to act now?
Got it. All right. Employee retention tax credit, just as it sounds. So listen to, while I talk today, just listen to be able to go some buzzwords and just say ERTC. And there's a lot of acronyms, but the Employee Retention Tax Credit. I'll take you back to the CARES Act almost a year ago, which came in, right around March 27th of 2020. That was the big $3.some trillion. And that's when the beginning of the PPP loans came in, the Paycheck Protection Program loans, which are basically going to be forgivable if you actually spend monies on qualified expenses. So what happened in the initial law was that if you had a PPP loan, so that's where everybody applied for those $350 billion, and people went through that. That program expired from right around August 8th of 2020. So if you received one of those, the rule was back then is that you couldn't, if you retained employees, you couldn't take this ERTC and take and get a PPP loan. We always thought it wasn't fair from a tax perspective. And sure enough, December 27th of 2020, in the consolidated another act by the government, basically what happened is that you were allowed now to go back to March 13th of 2020, and you can't double up on the wages. And I'll say that a couple times, but you're able to go back to March 13th of 2020 and look back, and for periods that you have payroll and you retained employees, and I'll get into that, but for payrolls that you retained employees, you're going to be able to take a credit. I'll explain how much the credit and a little bit, high level of how you do it, but that's what happened with the December 27th Act. So,
okay,
go ahead.
Well, I was just going to say, we're going to jump in and I'll kind of lead you through this. So the ERTC, Employee Retention Tax Credit, it's retroactive back to March 13th of 2020. Right. Now we want to talk about a couple bullet points here, the wages used for ERTC versus PPP forgiveness. And, right. I'll let you expand on that. So what I heard, and I've got all this information that he sent me, I'm privy to it. I'm super special, but I'm going to lead you guys through this. So wages you were saying used for PPP forgiveness or for ERTC cannot be used for PPP forgiveness.
That's right.
Expand on that, and then we'll go to the next one.
Okay, so basically what happens is you need to optimize or take the benefit of both. So if you have a PPP, you have 24 weeks, or you can elect 24 weeks that you have to pay that monies out in wages. So if you got your loan in June 1, let's just say you actually received one from June 1 to the end of you've got a 24-week period. In that 24-week period, you would have probably paid out your wages, so you would have qualified for forgiveness. So let's just make that assumption. That means there's extra wages that you paid in that 24 weeks that are available for this ERTC. Perfect example. Operator called me and said, look, from March 13th to June 1, I kept employees that would have qualified for the employee retention credit. I also, June 1, coincidentally got a PPP loan. So from June 1 for 24 weeks, those wages in 2024 were for PPP. But now you can actually go back and amend tax returns. You would amend your employment tax, your employee tax, your 941s, your employment tax returns to take this credit from March 13th to June 1. So you're not doubling up. Now you can you can go back and forth between the time periods, and that's where somebody needs to help you get involved that has payroll records, or you do it yourself, but you're picking and choosing the 24 weeks of the PPP to make sure you get forgiveness, but then also you take wages that weren't used for that and you apply them for the ERTC.
Okay, so basically it's like, I think you said it right, you can't double down or double dip.
Double dip.
It's like if you've already used some of your, the PPP for this, you can't apply that to the ERTC. But if you've got new employees and things like that coming in, basically have somebody looking at your records and see what kind of a payroll that you can apply to that, correct?
That's correct.
Because I think the next bullet point, which disappeared from my banners, but wages used already for PPP forgiveness currently can't be used for ERTC purposes, which That's is right. The exact opposite of that. So basically, don't double dip. And honestly, you've been preaching that since day one.
All right.
No, honestly, just for everything.
And take a time out if you have not applied for forgiveness. Just time out, because once you apply for forgiveness with your bank, you're locked into the wages, and the bank's not concerned. So if you've already applied for forgiveness, and the banks the banks specifically are just trying to get it off their plate. They're saying, okay, here's the first 24 weeks. They're picking your wages, whereas you're not thinking about which is the best for ERTC or PPP. So just time out. If you're listening to this and you don't apply for forgiveness, that's my opinion. Just time out. I'm recommending that to anybody. Ask somebody, your CPA, your payroll specialist, or me, or somebody that looks back and says, oh, okay, is there a way to calculate the most optimum wages for each one? There you go. Then you can get assignment from that. Right.
Well, I like that. Like you said, take a beat. Just take a breath. Just instead of just jumping into it gung-ho, right. Make sure you understand it. So I guess that it's going to lead us to the next thing. How do you qualify for the ERTC? I know we've talked about it a little bit, but this is the next bullet point. So we're talking about there are government partial suspensions of operations. I mean, why don't you briefly talk about that?
So I'll read it. Look how brief it is and how much flexibility we have. A government partial or full suspension of operations limiting commerce, travel, or group meetings. Well, tell me how much that doesn't apply. How much more could that apply? And you can go, well, what if? So here's what I recommend. Go back to the time period that you're going to use ERTC. Let's say March 13th to June 1. I know that's the case up in Missouri. How do I know that? Because I had the client go to the state of Missouri's website, and on there was impact of COVID. So it was a state mandate. In addition, so again, all 50 states were mandated March 13th under emergency declaration. Then we went down to the state, and the state there was from March 13th to June 1. So if you're in Missouri listening to this, I can just tell you right now that. So we on any of these ERTCs, we went from the wages from March 13th to June 1 just to start and to really see how much benefit that was. So what do I need to keep? Go online and look for the time period, then go to the city, the county, or the state that would have impacted you. And I'll read it again. Government partial or full suspension of operations limiting commerce, travel, or group meetings. I'm not going to say restaurants have like a hall pass, but basically restaurants and the accommodation industry are basically like, okay, you're a restaurant. You were impacted. I mean, 25, 50, you were just impacted. Yeah.
Well, it's in 33% of that statement, or 66% of that statement of suspension of operations, limiting commerce or travel.
That's right.
If you don't get commerce or travel as a restaurant, let's just say that's going to affect you. Also, a lot of restaurants have group meetings. I've been to numerous group meetings at restaurants, but
right.
So it does affect you. It's not we're not nitpicking here. It's not just trying to squeeze in where maybe you don't fit.
Right.
I think that definitely affects the restaurant industry. At least 66% of that statement right there. So, but then there's also another bullet point that you would put up there is there's also a specific decline in gross receipts for the quarter.
That's right. So you can. It is an or. So you can either be full or partial suspension, or you can mechanically look at your gross receipts between 19 and 20 for the same quarter. For first quarter of 19 to 20, second quarter of 19 to 20. So if you had a specific quarter that you would qualify as well. But again, most people in the restaurant industry they were impacted in some way or another. And again, you go to both the city, the county, and to the state. And what I'm telling people to do is get online, find specific articles or mandates from the Secretary of State or from the governors or from anything on that that impacted you. And you just print that out and save it in your file. So then the next thing you do is the amount of what it is. So is that clear, Brian? So
yeah,
the amount
absolutely.
Right. And where this gets exciting is that you go from March 13th to June 1 and you go, well, I was open and I was impacted. I had 25% or whatever. It doesn't matter. You retain employees. So it is up to a qualifying wage is if you paid that out to an employee. So if you paid an employee during a time you had this full or partial suspension, you get 50% of the wages up to $10,000 for each employee. So if you start from March 13th to June to May 31, and let's say you paid 10 employees for $10,000 each just to stay on, it's a 50% of the 10 employees. Let's just say 5 employees, 50,000. So that's 50% of each one. That's 50%, which would be $5,000 per employee if you paid them all. So that could be, how much could that be? $25,000 for 5 employees in the first quarter and you go from March 15 to June 30. So you take that time period of the wages and it's 50% up to $10,000 in 2020. That's how it works. Okay. Now 2021 is different and that's but I'm going to end on this. So for 2020, and then I'll move to 2021 because it is a different. 2020, you look at the period from March 13th that you didn't have the PPP loan and from that point and that you were impacted by COVID. Full or partial suspension, go to the city, county, to the state, go to the Fed, pull down articles and say, I was impacted. You then you pull your payroll records and go, I paid this much during that period of which I was full or partially shut down, and you quantify those and go 50% of those wages, and you just do the math. Once you do the math, you then have to get some help from a payroll company, or if you do it yourself, and you have to say, you let them know, how do I amend a payroll tax return for the ERTC? If it is a big organization like ADP and Paycheck, some of the big they know, give me the wages. They either have ways to enter those in, or you could do them. You can basically do them yourself. So I'm actually doing this for a gentleman that has 3 restaurants. We identified the wages. We let them know. They did the calculation, and they're amending the return. So back in 2020, you have to amend up until for wages through March. You include those in the second. So you potentially could have a second quarter, a third quarter, and a fourth quarter amended employment tax return to take advantage of these credits. To get you excited, you need to go do a preliminary calculation. If you were impacted and you have not done a preliminary calculation of how much ERTC could benefit you and your restaurant entity, you just need to do it. I don't know how I can say it. And I mean, every person that I've talked to that hasn't gone through this process, well, without exception, most restaurants that I've been working with are impacted in some way. It's just how much time do you want to spend and figure out how much money I can get back.
Yeah, absolutely. And that's why we're here to kind of like put you in front of people so that it's not, hey, you got to listen to me because you got to listen to me. I want to help you. And Lenny Rago right there, he says, listen to this guy. Thank you so much, Lenny Rago. I think he knows what he's talking about. I've heard these success stories from it, but I put it up there in the comments. Everybody who wants to ask their comments or questions right here, you can do it live through the Facebook. You can also reach out to Mike at hightechcpa.com for any more questions about this. But we were going to move on to, I guess we were talking about the 50% credit of qualified wages. That's for 2020. Now now it's like 70% credit of qualified wages up to $10,000 for 2021, which kind of brings us into the present. So, I mean, if you want to touch on that briefly.
All right, briefly, because I know.
Well, no, as much as you want, honestly. Yeah. Give us all the information you need.
So again, if you're an operator, you're just taking away buzzwords. So now just know ERTC, and it's 2020 or 2021. So now you're like, why I want to do this event right now for all PMQ is to basically go, okay, I have a payroll tax return coming up, and it's going to be for first quarter of 2021 that's due in April. Okay, time out. Before you file that return, there's a way to get some money in your pocket now. So if you have identified if you were impacted in 2021, same way that we talked about, and you were impacted in your city, county, state, you basically notify your payroll company from January 1 to current. So we're not quite done with March yet, from January 1. So your payroll company, and the top ones have the ability to go back and basically put them in their system that say, okay, you qualify. That number now is not 50%, it's 70%. And because of the act that went into play in December 27th did two things, that act. It said, we're going to extend the ERTC for all of 2021 per quarter. So you get to, maybe I'll do this every quarter because every quarter qualifies by itself if you were impacted. And I'll tell you, it's places like California, Chicago, yes, Texas and Mississippi, where Brian's at right now, they got the Hall in Florida. But the places that are still locked down or impacted, you're able to take advantage of this. So from January 1 to current, you basically take the initiative and let your payroll company know these employees, I'm impacted, because again, they're relying on you as a client of a payroll company to notify them. They're not going to do the work. I had this done in California. Specific example. The company, I'm not gonna bash them, but basically the payroll company said, well, you never told us. The number was 58 grand from January to now. And of course we fired them. And we're looking for another payroll company because that's and technically it probably wasn't their doing, but everyone's so busy right now. So I'm just letting you know, if you have not gone through this process, get your payroll company on the phone, get your accountant on the phone. If you have to email me. I'll at least go through the initial and at least brainstorm with you, but at least do it before. Why? Because there's another form called the 7200. And I'm not going to bore you with forms because that's my job, but 7200. If you have monies right now already that you're entitled to before you file your 941 tax return, which is going to be sometime in April after you pay your wages through March 31 of next week, you can fax in a form and get in line to get money from the government for the credit that you're going to take on that form. Did you hear that, Brian? You can actually send a fax in on a form and say, here's what I'm going to take up until the wages you have up until this date. Again, the payroll companies the bigger ones have exactly how to do this right now. You have to be assertive and go get that done. So I'm talking about 2021. Why I want to do this is, again, take a timeout on your PPP for 2020 and make sure you're allocating the wages to your advantage. So maybe you've already done that. Then look at 2021 and say, okay, I'm still impacted. Again, Chicago, California, parts of New York, there are pockets now still impacted across the country. I don't know where it was, Michigan. I think they had a 5-day lockdown or something. But anyway, if you're impacted, you take payroll, and it's also by day. It's not just, well, I pay every 2 weeks. No, if you get assertive enough, I'm helping a person go by day to when we apply, because we want the maximum benefit. Okay, it might be overly anal, but that's just, that's the way I get into it. And I want to make sure, and you should have advisors on your side doing such that. So right now, time out on, go ahead, Brian.
Well, no, I was just going to say, I like how, there's so much passion coming out of you, so much information. And I like how you said, let's do something quarterly. Let's set that up just as things kind of change, because you were talking about doing, more, I don't want to say more informative shows, but just updates quarterly as things kind of move forward. So honestly, at this point, I wanted to just kind of jump over real quick, because we're going to get to where they can get a lot more information. And that's the thing, is you're giving a lot of information right now. They're going to be able to get it so much more in depth. But I wanted to go through, I guess it's basically the questions that you should be asking your accountant at this point. What should you ask your accountant when trying to plan for this? If their accountant is not you, obviously, because you're going to have a lot to say to these guys.
Okay. Well, intuitively, if you got money for a PP, if you've heard of the word ERTC and you have not been talked to about that, pick up the phone and call. ERTC, the Employee Retention Tax Credit. If the response is, oh, you don't qualify, go, then what did I just teach you? Wait a minute. My city, my county, my state, and the Fed, I was impacted. Why don't I quantify? Now, again, CPAs, this is our time of year. We just got March 15th was corporate extensions, LLCs, entity extensions, and April 15th. But hey, man, our individual was extended 30 days. So you can go, wait a minute, accountant, you got an extra 30 days. Let's run some numbers here. Second thing is, have you filed for forgiveness? If you haven't, again, time out, pick up the phone and go time out. Don't just let who helped you do your PPP get forgiveness from the bank and go time out to do this calculation. So then you've got you might have an email and go, oh, okay, just sign here and we'll give you forgiveness. It sounds neat, but you're probably going to get forgiven anyway. Then the next thing is that your payroll company. Get a hold of your payroll company, and for 2021, go, I have been impacted, and go for the first month or maybe 6 weeks or up from January 1 to now, and go, yeah, I was impacted. Well, pick up the phone with your payroll company immediately. Go, are any of my employees labeled and classified under ERTC? And if not, and it's like, well, you didn't tell us. You don't get angry like I did first. Basically, just go back to your accountant and go, how come we have a, and it's not, this is not an accusatory thing. It's really complex. I went through a full 8-hour seminar. I sit here and study it a lot. So really it is complicated, because we were first told no, and then we were told yes. So March 27th of last year, we were told no, that we couldn't take this if we had a PPP. And now December 27th, we were told yes. So just get to the bottom and take the initiative to get to the bottom. Time out on your PPP forgiveness. And it's not that you're not going to be able to, it's just that you have to spend a little bit more time. And so, and I would say, what to ask your accountant. It is not a aggressive phone call. to why didn't you tell me? It is, hey, I think there's money out there, because I've heard of these buzzwords. What and explain. And the other thing, I actually love when a taxpayer calls me or a client calls me and says, explain it. What is this? So I know for my own knowledge, so that when I see an article or something, I'll forward it to you. And so I will get articles all the time that people say, what's this all about? Does it include health insurance paid by employer for applicable payrolls? Reduced payroll deposits by, what's this form 7200? Do I have to file a 941X? Here, not available for more than 50% owners, in my opinion, related individuals or self-employed. Mike, what is all that? And that's where you just hit forward, right? We all know how to do that. Forward, forward, forward. So I would rather take it and then get back to the person and go, here's how it applies to you, especially if they're my client. Does that make sense, Brian?
No, not at all, Mike, because it's a lot of information that you understand, and it was given out so fast that I think people need to get in touch with you and give you the specifics so that you can tell them specifically what applies to their business. Right. I didn't mean to be rude, but that's what I'm saying is that, everybody's business is different, as you were saying there. Yeah. So they need to reach out to somebody who's going to understand. And there were so many examples out there of you understand it. And that's why I'm super excited. And I was just trying to keep up with you. We had some of the questions to ask your accountant, does ERTC apply to my business, which I think you were covering, is the PPP versus ERTC, which is best. Now, granted, if you've already applied for one, you can't apply for that. You have to have different, payrolls. PPP and ERTC is basically they pull from. I guess it's the same as payroll employment, but you want to keep the retention. So
PPP, you got monies in advance to spend on payroll. ERTC is retention. Payroll, but you take that payroll and get a credit for it. So one is you're getting money from the bank. The other one is, but they're two different wages. It's wages at different times. You just have to separate them out.
Yeah, no, I got to do my own taxes too, man. I'm listening to you, and I got to go home and do my taxes tonight. So, but I mean, also there's another good question, and here again, guys, is that Mike's available at Mike at hightechcpa.com for any of these questions. Like Lenny Rago says, you should listen to this guy. We're going to tease a little bit about some information that's coming up in the future, but also, should you apply for loan forgiveness before you consider the ERTC? Well, most people have already applied for loan forgiveness, I would think, right in the past, or is it something that they maybe missed the boat on and they can do it now?
Well, nationally, the stats are 38% of people who got PPP have applied for the loan, has applied for forgiveness. So obviously, no. Right. And again, and let's just say, well, gosh, you also now, if you were a sole proprietor, you run your restaurant. I just did this for a restaurant, independent restaurant up in Missouri, Southern Missouri, and he had a net income. He didn't qualify for round one, what they call PPP 1, and that's because his net income was break even, but he had $500,000 in gross receipts. Well, now under the new, we're able to actually do. There's a new PPP2 requirements for self-employed out there, and means you're running it as a Schedule C from March 8th forward. And now you can go apply for a PPP initially if you even didn't qualify in the back. How's that? This was actually for ERTC, but now there's a PPP. There was a 2 that was available starting December 27th, but as of March 8th, if you're a sole proprietor out there and you have actually and you're able to go apply, and you didn't apply in the past, you can apply now. And I have one going right now. And when the number came over about $55,000, it was like, okay, it was just, that will be a game changer for his restaurant right now. So
no. I mean,
sorry about that.
Go ahead. No, I mean, yes, my head's spinning because I do not understand tax law and all this stuff. This is why I'm lucky to know a gentleman like yourself. And I did want to let everybody know, I think we've kind of covered all the topics here real quick about the ERTC. But again, if you have more questions, as I know we all do, I'm going to put it up there in big letters. Email Mike Rasmussen at Mike at hightechcpa.com. He can answer any other questions you have. But we did want to talk about, you're going to be writing an article for the May issue of PMQ Pizza Magazine, kind of talking about this as it continues to go on. And you've given me this great PDF. I don't know, should I show it? There's a whole lot of highlights. Did you want to look at it and kind of run down some of the things you might be talking about?
Well,
do you want me to show it?
No, I'll let me just talk to it. I'll talk to that. Right.
Okay.
So what I would do right now, you're an operator, listen to this, or is re-listen, forward it, have an accountant or somebody listen to it that basically says, does the ERTC or PPP, if just those two acronyms, just like, oh my gosh, I have no clue what those are, that means you probably were not, you didn't explore the idea that those could impact your business. And now during tax side, may as well have that happen. What Brian's referring to is that I wanted to bring this up because of your tax filing coming up for a quarterly tax return. So if you were impacted in 2021, it's available. So if a lot of time, here's what happened. CPAs checked out when the old law, but you've really got to be after it because now the new law says you can use it. Okay. Now there was another law they called the American Rescue Act. That was the American, oh my gosh, the American Rescue Plan Act of 2021. Here we go again. We got another one. Well, what is this? In there was a great piece of legislation, and I'm not going to talk any details, but I will on April 8th. I'm going to do at least a 30 to 60 minute deep dive into what is the American Rescue Plan Act of 2021. In brief, these are specific credits and tax incentives for restaurants. So the restaurant industry, you're going to hear, now that I've exposed you to it, you're going to hear about this. Oh, but there's a grant. And then there's going to be a difference between PPP loans, right? And then ERTC credits. Now we're going to have, now I get to explain grant. If you haven't been exposed by your accountant or CPA for PPP loan, ERTC credits, or an upcoming grant and how you apply, how my entity applies, pick up the phone. CPA's too busy. My tax return's extended till April or till May 15th now. There's really no excuse, Brian. Sorry.
No, well, it is your business, and you need to be, even if you don't understand it, you need to be talking to people who do. So be it your own accountant, you find an accountant. If anybody wants to reach out to Michael Rasmussen, again, Mike at hightechcpa.com. It's a very easy email to reach out. And this gentleman right here is very free, willing, and giving with the information. As you can see, I can't get him to stop talking. He just wants to talk tax all day long. And
I got plenty of taxes to do. I have no problem. I'm not buying time here.
No, but we definitely appreciate everybody tuning in, and we hope that you, even if you didn't get to see it live, you can watch this video after the fact. But reach out to Michael Rasmussen at hightechcpa.com, and as well as just safeguard your business. You need to either get the PPP or the employee retention tax credit. Do something to make sure that your business is going to stay strong for a long time, but also you got to take care of the employees. If you can't pay your employees, you don't have a business. Mike, I'm going to ask you one real quick thing. What's kind of your feeling about what's coming up in the relief funds, or some of the things coming up here recently? Then I'll ask you for a final affirmation, and then we'll be done.
So I can't. I'm not sure. Well, here's what I'll say. Don't be timid to pick up the phone, and even if your CPA has you on a, they charge you to make a phone call or whatever, just a quick email, PPP, Ertc, or how the American, the Rescue Plan Act of 21. Have you thought about that for me and my business? And the second one, don't be embarrassed to ask to get a little education. Get a little education on it. These are very difficult to stay up on it. So just don't be timid. Don't be shy. Ask why. Ask, does things apply in a nice way? We're not offended. Just respect our time, but just go, could you briefly explain why this did or did not apply to me? That's it.
Yeah. Well, and then you have to go in there genuinely wanting to know, and not just being being kind of genuinely pissed off as to why maybe it didn't apply to you, or not even that, why you didn't understand why it didn't apply. So
That's right. Right.
you have to go in there with a certain level of humbleness, knowing that you did not understand this. And this is why we're talking to guys like you.
That's right.
Because you know it. You let us know. So just a final affirmation, something good for the industry, because it's, early 2021. People are getting vaccinated. We're all getting out there again. Restrictions are loosening. What do you think is going on for the industry right now? And what can you, say to keep everybody positive?
I would say make sure that you've embraced technology of how to, although we locked down and you had to modify your business model, the business model is not going to go back completely to where you were. So there's going to be somewhere in between, you can't have anybody in the indoor dining and you went the other way. And now really take some time and look at your business model over the last year of what really generated you the highest profit, because it might just be that having a number, being only open 40% in dining or a certain percent of dining and mostly carryout, and I didn't get the technology that I probably should have or I could have. But look at what generates you the most profit over the last year, as you're starting to open up, and possibly don't go back up to complete, all the seating. I've had restaurants that basically chopped them in half, increased the kitchen to do more throughput because of the takeout and and orders that way and come drive through. So you've got a new model. Look at your numbers and say, when did I make the most money? Look at those by month and go, wow, it was when this many people were coming in, and really appreciate that. The numbers aren't lying, and we're not going back to where we were. More than likely, we're not going back to where we were. So if you made more money being park drive-through, take a hint. That's what I would say. Pizza's kicking booty out there. There's no doubt. It's one of the ones that you were pretty much, pizza was ready to embrace the pandemic, and it's not going away. So.
Well, it had the best adaptability out of any kind of dine-in restaurant kind of operation. And I like how you said, just take a cue from what you've learned. You don't have to go back to exactly how you were. If you want to, that's fine. But take a cue from what you saw worked.
Yep.
And it might be just a bigger boost in delivery and carry out. So I love that. I did want to put up there too that we had talked just right before this. April 8th, we want to talk with Mike Rasmussen again with hightechcpa.com about the next, just a little more in depth about what's going to be going on in the May issue with all these tax credits and things like that. So
grant.
I'm sorry, credits.
Grant.
I got to use the correct terminology because it paints a picture. It's a difference between a credit and a grant, and I mean one word can paint a different picture on what you're getting. So
grants are taxable. How's that? You don't pay tax on grants. There you go.
That's what I'm saying. Like there, if you say grant deductible, boom. So, all right. So, April 8th, we're going to be tuning in at 2 p.m. Central Standard Time with Michael Rasmussen, hightechcpa.com. Talk about all those tax grants, employee grants, everything you need for your business to keep it going forward. As we're coming out of this dark cloud that has been the last couple of years, and I know we're all tired about it, and I'm not even going to say another word. So, Mike, I really appreciate your time today. This is going to live live on PMQ Facebook as well as Pizza TV, US Pizza Team, also PMQ.com and Pizza TV YouTube. So you can go back and reference these videos anytime you want. Just Google Mike Rasmussen and live update, and you'll get there. So past that, I mean, you've given your affirmation. I want to say thank you again for your time, and we'll see you guys next time. I want everybody out there to have a great weekend. Stay safe.
Thanks, Brian.